Reserve Bank of India this week announced a 50 basis point hike in the repo rate. Now, this is the rate at which the Reserve Bank of India lends money to commercial banks. And if borrowing from RBI becomes more expensive for banks, they have no choice but to increase interest rates on all retail loans, including home loans. Today on the Property Show, how much will that pinch your pocket? Considering the latest hike comes on the back of a 40 basis point hike in repo rate which happened on 4th May. Now, should you wait it out for home loans to cool down before taking the plunge on a home to buy? We also have on the show a review of the Thane housing market, a destination for affordable and middle-income housing for Mumbaikars. The apartment unit launches in the first 5 months of 2022 have surpassed all previous years. Is there really that much demand from home buyers is the question we're going to ask. We have with us Niranjan Hiranandani, founder and MD, Hiranandani Group. Also with us, Abhishek Kiran Gupta, CEO and co-founder, CRE Matrix, and Pankaj Bansal, Chief Business Development Officer at BankBazaar. Now, BankBazaar has given us a lot of data on how much more expensive our loans going to get this year, starting from 7% if interest rates go up all the way to 8.4%, which many experts are predicting. So, Pankaj, the first question to you is it too sudden, too soon, and is that going to affect the sentiments in the market?
So, thanks, Manisha. I think first and foremost, obviously, this was on the cards. The way the inflation has come up in the 7.5% to 8% range, right? This was very much expected. I think I'm not surprised with any rate hikes which has happened. And obviously, if this trend continues, you will see more, rate hikes to happen in the next quarters coming forward. So 40 basis points we observed on May. June, we have got 50 more basis points. So technically, to sum it up, I think broadly, if I'll just give you a very basic illustration for consumers' benefit, is that assuming if I have a 30 lakh loan, and about 20 years of, tenure that I look at it, broadly, I was paying about 23,250 rupees as my monthly EMI on a 7% loan. With this addition coming up, I think it will be now 1,648 rupees extra for the consumers to share up, because 40 basis points move the rate from 7.4 and the other 50 basis points will move the rate from 7.4 to 7.9. So if the 90 basis points increase in the overall interest rates that the consumers will face, so broadly at a monthly level, the number is about 1,650 rupees for 30 lakh loan over a period of 20 years.
Okay.
How it translates into real numbers is very simple. Every year, this particular thing will raise about 4 lakhs of interest that a consumer will have to pay, in the overall scheme of things. So when I was paying about 25 lakhs kind of a number, right, on the overall number, today, after these two rate hikes, we'll be paying about 29.78. So broadly, in an absolute number, will be about 3.95 lakhs of interest I have to pay more. So I'll have to pay 30 lakhs plus 29.58. Obviously, I'll have to pay about 59.58 lakhs over a period of 20 years of a 30-year loan.
Wow. When you put it that way, Pankaj, the number looks really big, and then of course on a 50 lakh loan, it proportionately goes up by that much. My question here is, and I'm going to toss to Mr. Hiranandani, sir, all experts and pundits are saying this is not the end of rate interest hike. You are going to see at least another percent, and what BankBazaar has given us is that it could actually go up to 8.4% just to rein in inflation this year. What happens to the sentiments? I mean, is it short term? People get over it? Because the momentum so far has been phenomenally good. Will it continue?
Manisha, I have seen stories of 17 years ago, interest rates of HDFC at 16.5% for home loans, and people used to take the loans in order to buy the houses. Okay. Now we have come down to the lowest rate which we ever had in the history of India, which came down to 6.5, which has now gone up to 7 and likely to go up further, maybe up to 8% ultimately before the end of the year. My view is, personally, the sentiment is definitely going to be affected in the short run till the idea of higher interest rates gets absorbed. This takes some time, so people become reluctant to do it. That's point number one. Point number two, as we all know, this is a variable interest rate story, which means that if you take a home loan today and you take it for 20 years, the rates are going to vary. It's not going to remain the same. So it could come down again, it could go up again, and it will change depending on the situation that we are really faced with. So even if you say that the total amount as correctly calculated is going up by an X amount of money, in reality it may not happen, because ultimately the EMI may again change when home loan rates and the RBI again brings down the rates once inflation is contained. Okay. Remember that they have increased these rates only to contain inflation, and this is the monetary intervention. Not that the monetary intervention alone will produce results and reduce inflation, but that's the, what should I say, the tool available with RBI.
So what you're saying is that the government is making some efforts to, or in fact a lot of efforts to ease up the supply chain constraints, and probably, we may not continue to see just one way directionally on home loan rates. Abhishek, you have the numbers of the top 8 cities, looking at the inventory, looking at the sales momentum, which has really caught up. Where do you think this will land? I mean, sentimentally, do you think that the next 6 months developers should be cautious in raising any prices at least, because home loan rates are already going to go up? That's a given.
So home loan rates are definitely going up, and somebody who wants to buy a house, for him, if he's found his dream house, 1600 rupees per month will not be a make or break situation, right? That can't be a decision, the only decision factor. I think the larger decision would be the family likes the house, they want to live there, and they found their dream home. That I think is the bigger constraint. Yes, now another percent and that 1600 becomes 3200. As the other panelists said, yes, that could be a sentiment breaker, or it could be a dampener. But I think as we, the monsoon and the Shraddh period anyways is a lean period. So I think developers would be anyways very careful in terms of, big bang launches. Okay. And come Diwali, I think there'll be some good deals available, because developers are very, very smart. They're very quick to action things, right? They'll immediately come up with some ideas to circumvent this. So I'm not
too worried about demand dampening.
Happy. Okay. I'm happy as an analyst.
It's very interesting that this has just landed almost, it was, intuitive that I was going to do a home loan show. So Jeffrey says, notwithstanding the inflation worries, the housing cycle continues to gather strength, and history has shown that contrary to common perception, rising rates are associated with a booming property market, and it's really the other way around. Pankaj, do you have a view on it? I mean, short term, yes, everyone gets affected because when there's more money going out of your pocket, but overview in terms of housing interest rates and demand, is there a direct correlation which is positive?
So I'll tell you, if you look at it, I'll have to take it in I would say in more totality, as sir also mentioned. I think what is critical to know is that these rates are not something which is like unexpected. Everybody is expecting this. What we have seen from our data is that affordable housing has been doing pretty well. The ticket size for the loans for the homes have gone up. The demand has not subdued even after this COVID. People were really worried in the COVID sector because overall we are a consumption economy, let's be honest. And we are growing as an economy at 7.2% is the projection that even the governor said in the MPC yesterday. So I think the form factors looks to be very, very aggressive for the country. Consumption is going to drive the way the next wave is going to happen. I don't find a huge deterrent with these 90 basis points rise to happen, because your affordable housing, obviously, as the panelists said, that at a 30 lakh, 40 lakh ticket size, it's not a big dampener. 1600 rupees per month is not something that somebody cannot afford. From an affordability factor, it's not a big dampener. But from a demand factor, obviously, if I see a good monsoon happening, tier 2, tier 3, tier 4 demand, that would be very critical to see. Crude, clearly, Mr. Governor has said that we are looking at crude at $105 per barrel. As of today, it's at 120. So we have to wait for a couple of maybe 3 to 4 months when this Ukraine-Russia war gets settled, and the commodity prices also gets eased, and inflation is back to 5.5, 6. So there could be a silver lining to come, and I am hopeful that the monsoon has to be normal, at least from the country's rural economy, which could be a great driver in the next affordable housing bump that we can see in the next 3 to 6 months.
So 30 lakhs or 50 lakhs, we are flashing those numbers on your screen in terms of data received from BankBazaar on how much more will you have to shell out. But looks like as of now, the number which is increased of your EMI is not likely to dampen your decision to buy a home if you've already decided on which sort of a property or the family has liked the kind of home that you want to buy. Pankaj, I'm going to thank you at this point because we have to go on to discuss one of the micro markets, but great to have your data and pleasure to have you with us.
Thank you. Thank you. Thank you, everyone.
All right, over to the Thane real estate market. Now, why are we discussing Thane? Simply because it is one of the largest, or it is singularly the largest regions which is providing mid-income and affordable housing. And I say affordable, keeping Mumbai market in mind and not all India. Now, there are 5 key micro markets in Thane. There's Kalyan Dombivli, Navi Mumbai and Panvel, Thane City and Greater Thane. Of course, there's also Mira Bhayandar, as data received from CRE Matrix, and this is stacked in order of which is the largest market by sales and demand and the smallest market. What got my attention, and Mr. Hiranandani, I'm going to ask you this question, is the huge surge in launches in 2022. I mean, in the entire calendar year 2019, there were about 63,500 launches. And in just first 5 months of May, we've launched almost 41,000 new units. Is there that much pent-up demand, or is there other reason for so many units to be launched altogether?
I think both. The idea basically being that the demand is definitely there in the Thane market. And you are absolutely right. It is under the shadow of the Mumbai city and suburbs that the price points as far as Thane district is concerned, Thane city is concerned, is definitely a benefit to buy in Thane, which is on the periphery of the city of Mumbai and very well connected. Actually, they are so well connected that you really can't, you enter one and do the other, except there's a tall naka there. But having said that, the demand in this segment is continuing to grow and will continue to grow in the near future because also the infrastructure in this area is improving. Remember, Manisha, in Mumbai, we are now constructing 300 kilometers of metro, which will be ready in the next couple of years. And also the fact that the road connectivity into all these areas, whether it is Panvel, whether it's Navi Mumbai, whether it's Thane city, all the roads have been widened and every junction is now flyover. So a combination of metro, a combination of flyovers have made the difference in this segment. And also, of course, the backlash of what happened in the case of COVID times. People have decided that they want to live in a better quality of home. They want to live in new houses with more facilities. All that is now available in Thane. It is available in Navi Mumbai. It is available in Panvel and in the neighboring areas because of infrastructure and quality of housing also improved tremendously over the last couple of years.
Okay. I'm now looking at the sales numbers and the launches number. Launches we've already read out, but if I look at the sales vis-a-vis the launches in every year, Abhishek, in the last 4 years from calendar year 2019, sales have actually lagged the number of launches, right? So you have 60,000 units launched, then you have consumption of 49,000 odd units. Again, in the calendar year 2022, first 5 months, we've got 40,000 launches and only about 19,220 sold. My question is, are we looking at a glut in this market, or am I reading too much into these numbers? Because data is pointing to the fact that we've just, had too many launches too quickly.
No. So, launches have definitely happened. There's no question about it. And because Thane gives the home buyer what Bombay cannot give. Thane gives affordability. Thane gives infrastructure and connectivity to Mumbai. Previously, 10 years back, 15 years back, and Mr. Hiranandani can speak much better on this. When he launched 15, 20 years back, there was a very, very serious perception that only people who worked or had businesses in Bhiwandi were buying houses in Thane. I think that's completely changed. People, working class has moved to Thane, and they can easily commute to Bombay and still work there, right? So and my favorite, Thane offers community living. There is a structural difference and a structural change that Indians don't want to live in standalone buildings. They want to live in larger complexes where they can work there, they can have fun there. There's a mall, there's a school, everybody is, close by. I think that's what Thane gives. And it's not today. I wouldn't call it a glut, but launches have always superseded sales because you need to have launches, only then you can have sales. So I wouldn't worry about that at all. Without launches, you can't have sales.
And inventory overhang is also not bothering you, the numbers which have come from
inventory overhang is slightly bothering me, but I don't think we should paint the entire Thane district in one color. As you said, it's got 5 different constituents. There's some parts of Thane which is, above 1.5 lakh crores. There's some part of Thane which is only 30 lakhs. So it would be a little unfair to color them all in the same, brush.
Yes.
But yes, unsold inventory is about 2 lakh apartments. And average, we sell about 45 to 50,000. So there is an inventory of 4.5 to 5 years. Yes, in some pockets that does worry me. But when it comes to quality builders, quality housing, the builders building on time, and you look at these names. Mr. Hiranandani has been there for so many years. Runwal has picked a land parcel recently. Oberoi has picked a land parcel recently. You've got Lodha there, Rustamji, Raymond's, Godrej. There are none. They're all tier 1 top developers. You don't worry about building in time. Don't worry about quality. So there, I don't see any glut at all.
Okay. Hold your thought, Mr. Hiranandani and Abhishek. We'll come back and look at the pricing on where prices are headed. If there is a lot of inventory and a lot of launches, is that likely to put some pressure on the prices, or are they going to continue to remain flat, or will they rise with inflation? Stay with us.